I also wanted to understand, is it just commercial real estate that you are focused on in India, or later on, and there are many listed companies in terms of the tower assets that you said in infrastructure, in InvIT especially, there are roads projects which are expected to go public first. In these, which are the areas that you like, and is there something that you're averse to in India?
No, in infrastructure, we like the core asset classes, toll roads, cell towers, airports, seaports. We actually just invested in a company that was listed in the U.S. that's in the solar business, so that's of interest to us. So any infrastructure asset class that, again, is a good income generator and has preferably longer term contracts to provide that predictability and stability.
So all of those sectors you look at in India also, or would
we would if they're brought in a corporate structure or REIT-like structure that delivers the characteristics that we're interested in.
But not like a listed company kind of a structure.
We would look at that. If the underlying business is one where the cash flows are contractual in nature, and again, we don't like businesses that are cyclical, that have short-term variability. The public market likes, at least for us, we've built a very good business around delivering these predictable characteristics. Now, just to put it in perspective, in Asia, more broadly in the real estate area, where you have a lot of companies that are a combination of owners of income property, but developers of residential apartments, for example. We do invest in those, but our hurdles are higher to own the more cyclical, less predictable businesses.
In the U.S., you have recommended a few of the REITs listed companies to be delisted. Are those companies specific, situation specific, or do you think that things can go wrong? Are there any lessons to be learned from the Western markets which have already got REITs and InvITs, which India can really emulate and understand from?
Well, the delistings that have occurred in the United States have happened by way of companies being taken private, and that could be because the private market wants to pay a higher price for them, or it could be a situation where a company has stumbled on its strategy and its share price is trading below what the real estate is worth, and then they try to find a solution and find a private equity buyer to take it private. But those have ultimately been good for the public market investor, because there'd be a premium involved to take it private, and it's more often than not solved a situation where a company isn't performing well.
All right, Joe. Thanks so much for a candid conversation and for telling us your views on India and the real estate market here and your investment strategy that could be really taking off in India. Thanks so much. Lovely meeting you.
Nisha, nice to meet you. I appreciate your time.
Thank you so much. So key takeaways really coming in from Cohen and Steers. We'll be looking at India for more investments. 5 to 10% of the portfolio out of the $60 billion portfolio globally could make it to India if the REITs and InvITs are really going to be attractive going forward. So that's the word coming in from the Chief Investment Officer at Cohen and Steers. Thanks so much.